Start recording for the guys that are not here.
Yep. Gotta wait for Frenchie. Frenchie,
Yeah.
are you?
Frenchie, where's Frenchie? He's not here, but he'll come. Well, let's just wait for him. Maybe he can catch this while I'm doing it instead of waiting for a recording at the light. Lego. So it was the right call to close my longs earlier. There. So we had the making of something going here. We were in that order block. We were in all the good bits, and we broke MS here, fair value gap, market structure break. We came here. We even tested there. But as soon as it started to do this and create the range that it did, then in the back of my mind, I'm thinking this is no sign of any reversal, right? Because you remember earlier, it's actually a very simple thing, and some call it a mousetrap. The mousetrap setup where you get price going in a range, and people think it's some sort of bullish consolidation, and then suddenly you break down and then you break above it. Your entry is actually going to be here. If we are smart enough, let's see where we can get an entry, right? Because like I said, the last down candles in this move, the initial move down here, on every time frame that I look at it, it's a green candle, so that's not a good sign. You want your order block or your last down candle to be in my case, a black candle. In your case, maybe a red candle or whatever it is. You don't want it to be an up candle. You want the down candle, the last down candle, to be a down candle. So that tells me that this is going to get rated at some point. So maybe good news for some, bad news for others, and that this entire bottom here is not going to hold, right? And it may be creeping. So what we need to figure out now, does it go for it now and then we get something else after? Because what it actually is doing is it's going for opposing liquidity somewhere, right? So from the model that I posted earlier, where you get in a bearish case, you get a push, and you get an accumulation. Call that an accumulation. Call this a failure swing. You get an opposing run for liquidity that could be taking liquidity anything here, and then what you get is you get a push or a retrace, and then we do that, and then we do that, right? So we can see the start or the makings of something to that effect building here, where if we had this as the initial move up, right, call it the accumulation, this here as a failure swing, right, and now we're starting to run for the opposing liquidity. So we've taken this low, we've taken this low. Will we take this low is the bigger question here. Probably we most likely will take this low. If it wants to be a bit more trickier, then what we need to do is we need to look at a box model where we get some sort of reversal here. So you have your consolidation here, then we have the move out, the consolidation, which has taken liquidity. It's taken liquidity in two places, right? It's taken liquidity below these lows and then these lows. So that's liquidity taken that's good enough for us to assume that if it starts to go sideways here, that it has something to push a little bit further up to retrace. In that case, where would it retrace to, bearing in mind that we've got this opposing liquidity lying at the bottom here, at the lows here, which is a fake sort of order block, or fake low there. Which means what we need to do is we have a move here, right? You have the initial move. You have a failure swing, whether you want to call it here, 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 or here. It doesn't matter. And then you have the opposing run for liquidity. Now, this is where we need to be looking for. Is it running for here? Is that enough? Or is this going to be the one that it needs to take as well? Right? So then you have the opposing run for liquidity. If it starts to go lower, then chances are it may go for that 14.5 sort of mark on a higher time frame. Then we get that retrace that we were looking for. So if this wants to be a bit smarter, what we can do here is, on a lower time frame, we can already see a smaller version of the model building up here. So we have the higher model building up here, and then we have, on a lower time frame, we have a smaller model building up here, right? And if it wants to be smarter, what it can do is it can retrace either here or back here, and then push down again. So it comes back to the model that I gave you initially. You have the run of the liquidity, a break of structure, a pullback. You can get another break of structure, pullback, and then continuation on your first leg and second leg of distribution, right? Now, what this model is called is a zoom. This specific model is a zoom model, right? And I can give you resources to the guy that has termed the phrase. Just give me 1 second. Basically, if you watched one of my earlier TikToks, or what I've been saying all the time, when you get a push up like this, your stop is never safe at the middle leg. There's always going to be that one push down to raid those lows, because there's liquidity lying there, and then a continuation up. Now, these are more likely to happen when you have a point of interest below this here, and what it does is it creates something called inducement. You guys know that. I've been speaking about that for a while now. So what we have been calling this is a inducement setup. Once liquidity is taken, trend can continue. So what this actually does here is, people think that the point of interest was missed. They break of structure here, they start to get into longs here, and then suddenly you get a whoosh down, takes the inducement liquidity, goes to the regional point of interest that you have, and then continues. So the same idea is going to be applied in this model for this, where once we start to get three-wave structures happening, you're going to take in a bullish setup, you are going to use down candles, right? The last down candle. In a bearish setup, you're going to use the last up candle. So often what you would see is, let's take a look at this example here. This was a three-wave move to the upside. It's actually called a type 2 pattern because it moved in 3 ways. A type 1 pattern would have moved in one leg up. And notice, if we take the last down candle here off the middle leg, right, that is your order block. You have two things happening that can happen here. Now we need to reframe our thinking, because what this order block here is doing for us, and when we pull this order block out in time, you can see the interaction of it. It is giving us a reference point for us to frame where we need to or want to be short at, right? Whether price goes through it first, then comes back, your short would always be built in and around the level, right? Now often you're going to get runs off the level, and often you're not going to get runs off the level. It's this is just going to be enough, like you see here, and then you get a pull away. Now we've become spoiled in the fact that we want to see big moves happen once we enter from a level, right? That's one of my weaknesses. Like, I would assume that if it came here, why can't we go up there and aim for the moon? But the whole idea of the market right now is to take it to the next point of interest. So in this particular example, if this was the zoom candle here in gray, the last down candle in the bullish three-wave move to the top side, we'll pull that candle out in time just to see what the interaction is. And the first instance of the hit, you can frame your short around long or short around that, and you take it to the next point of interest. And in this particular case, it was a fair value gap here, right? So that was the reference for this particular move. Now you can see in this one, price ran through the level, which took liquidity, ran out of the level, came back, and what did it do? Can you see the candle body is respecting the level at the top, at the bottom side? So the level is, this level is a solid level drawn out across in time, and all of your framework or all of your entries are going to be placed in and around the level. If you're above the level, you're going to look for price to come in to take your entry to the next point of interest. Can you see that? If you're below the level, it may serve as somewhat of a resistance, and price may move away. Now we are below that level, but what I posted earlier when I said that this is going to form the basis of your entry when it does do something like that, whether it goes down first and then comes up, this level is going to sort of form the basis, or where you're going to plan your entries to form around. Now this fractal happens on almost every single sort of time frame. You'll see it everywhere, and what you need to be looking for then is, has any areas been raided? Let's look at a move here, and then we'll talk about it, right? Go on a 15-minute. Right, we had a three-wave move to the downside here, right? Where would I then be looking for shorts? Obviously, if this is our dealing range here, I'd be looking for shorts on the premium end of the dealing range. So we draw a fib, and anything above the 50% is good for me. Some sort of PD array point of interest that we can find. But we already know that if we're using this particular model, we expect the high of the middle leg to be raided. If not, what we would do is we would use in the bearish case, up candles as an order block. So the very last up candle, let's just make that there. Okay, I'm just going to leave that as undefined for now. And when price comes back to it, so we had a move here, and then price came back to it, you can see how our short entry was framed around the zoom candle. That's what it's called. It's called a zoom candle. So that last up move there, taken across in time, would form entries for us to take, right? Does that make sense? In an uptrend and a downtrend, you'd use the very last candles of the middle leg. Right, now, like I said, you'd see that on every single time frame, and maybe this is going to open your eyes to things that you haven't noticed or seen before, right? Again, three-wave move. Price seeks liquidity and then moves away. Where would that liquidity be found at? Well, we got two options here. We have, in this leg here, we could probably use and most likely use this last up candle here, right? Or you could use a bigger candle, but I'm not a fan of the bigger candles being used, but you can see that it respects the upper end of the boundary well. Here you had extra confluence because you had an order block anyway here to frame that entry, and like with anything that breaks structure and that forms a dealing range, so the fact that we broke structure here made this initial move up the dealing range, and we would take a fib here. Anything below the 50% in a premium that has a PD array, you can see fair value gap or balance price range here. You can see how your entry forms around that bit there. Let's just take a quick look if we can see whether this move to this move gave us anything. No, it didn't. Right? Usually the market will seek or tend to move in a 1:1 almost measured move there. That's not what we're talking about in this particular stream. In this one, we're going to look at the zoom candle. So we had the zoom candle, and it gave us two entries here, right? It gave us an entry up here, price came back into it, and then moved away. This, obviously, these being the zoom candles in here, whether you use that one or that one. So it's more about how price reacts to the level than the actual level itself, because you can see here with this fair value gap, we're not interested on being too precise. We could have waited here. Price initially came back into here. We could have waited, and you can see price tapped in again. So that gives us confidence and confluence that this fair value gap in here in the premium end of the market is something that is going to work for us to take the entry, right? So it's all about how price reacts to a level, and we're not holding the level as something cast in stone where it has to hit this level and respect the top boundaries or the bottom boundaries. No, we're not interested in that. Again, you'd see this in all sorts of different time frames. Just start to go back, dissect even the lower leg of moves, right? So you got three-wave move to the top side, price came back. Where did it come back to? In the middle leg of the zoom candle here, and moved away, right? Try and find, it's a very simple thing to find. All you're going to be interested in is it three waves to the upside? Find the order block. When price comes back, and it will for the order pairing part of it, because this move may have been too violent and too much displacement that it left orders behind, and then the orders will come back to pair either by raiding the level or playing around the level and then moving away. Alright, does that make sense? That's just basically the zoom candle or the zoom model.
Yeah, so can you look at the weekly chart for Matic USDT?
Yeah, we can.
Because so from the top, we've obviously got a clear break of market structure to the downside, and then this move we had when alts were running is a very clear three-wave move up, right?
Yeah, let's have a look. So we'll go to a weekly, and then we'll go and look at Matic. Let's drag this a bit to the left so I can see what I'm looking at. Matic. Alphabetical order, yes it is. Okay, just give me 1 second. I want to just double check something. Okay, cool. That's doing the things that we like. There we go. Matic, right. So three-wave move to the downside, right? Now let's look at this one, right? Why did I do that? We'll keep this one because that was my plan initially. And this may not be the one that you like to see, because if we use the zoom model, for instance, it means that this was the first leg up, right? This was so accumulation, failure swing, opposing liquidity run, retracement or push down. What comes next? probably a move like that, right? What comes after that?
Right. So this is so the three-wave move I was looking at is actually the one that rejected in that golden side.
Right. So you're
So the one
looking,
from
yeah,
the
I can see it. I can. It's glaring. It's this one, right?
no, it's the
Or
one
you're
up,
talking about
right
this
up.
one?
That one, yes.
Yeah. So
Because the down one actually broke market structure, right? Because you got that red line with that low to the left
right.
that
So
we've
this
taken
this
out
broke
on the
market
bigger
structure
one.
here. This took the liquidity here. Now you got to be careful with these kind of ones here, right?
Okay.
Because we've taken liquidity here, which is enough for us to assume that price can reverse from a box here and start to do that. Now we've got a three-wave move to the upside. Some Elliott wave guys may count it as 5 and be more bullish. 1, 2, 3, 4, 5. Whatever, right? The fact of the matter is that if this could produce bullish results or intentions when, if we keep it in context, we had this kind of move here, and we know that there would be liquidity lying here, right?
Right.
That's where we would be aiming to go for on the larger time frame. So the larger time frame is telling us that there, that broke market structure. Let's do something in here that gets us back there, and then death. Right? Not in the minuses, but maybe even just below here or back to base. So it's setting up something in here, and this doesn't have to be bearish here, right? It's, if you're counting it as a three-wave move to the upside, that's fine. The last candle here is this one, and we're coming to it. So now we're gonna see whether this, if this becomes a dealing range from the bottom here to the top here. We aren't interested in buying anything, and we are at the level to start buying, right? 50%. Now, knowing that there are other PD arrays on Matic you could use or look to use. You have the fair value gap that's coming all the way up here. All right, so let's just make this a zoom candle. Let's make this a fair value gap. And obviously you have the order block right at the bottom. Do I have bearish? Do I have a bullish order block? Let's call it extreme order block. Right. So we have all the things that we need to develop some sort of a bullish case for Matic to possibly go up there, right? All we needed to do is it can either do something like this, come down here, and then we form a reversal pattern in here, and then something happens around here and the zoom candle, which will form an entry or provide us with an entry if we haven't gotten one yet to do that. And once we get here, we know what to do. When everyone else is bullish here, we're thinking, no, we want that. Even if it's just below this low here, it's enough. Because what that's going to do, if you think about it high time frame, it's going to give us a form of consolidation that occurred, right? And we know we can't go higher until we run liquidity. So even if Matic starts to go sideways at a very low level, we know that's coming next. So if Matic starts to get bullish, we don't mind. We want to be bullish in discount levels below the 50%. In the FVG, taking the inducement liquidity here, whatever it is, right? Take the inducement liquidity, fill the FVG, come down to the order block, whatever it is. It's in the area, it's at 50%. It can just move from here if it wanted to. But obviously, we've got this liquidity lying below us, Why not take it? Take it, and then we'll see what happens from there.
As Russell Peters says, take it and go.
Take it and go. Take it and go.
Yeah.
Right. So you're gonna start seeing everything, and if you're an Elliott wave guy, it's gonna even make more sense to you. Everything is just moving in threes. Right? But these threes have a purpose. Again, we have initial accumulation, a failure swing, opposing liquidity run, a push, a retracement. You can get another break of structure here to push down, and this can still come back up here if it wanted to. Because remember, within this leg here, there's going to be some sort of three-wave move that gave you a zoom candle there. And within the top leg, there's also going to be something in here which gave you a zoom candle in here. And sometimes these candles will overlap. The levels will overlap. So, Inception kind of vibes, right? Zoom within a zoom within a zoom within a zoom. And you don't often get this back, but if you have a level here, be aware that if price breaks structure here, it needs to seek liquidity somewhere, because what happens is this created a dealing range from here to here, the initial leg down that broke structure. And then when we broke structure again, we created an even bigger dealing range from the top to the bottom, and so on and so on. So price can very well come back to that level of the zoom candle and then carry on moving. So as long as you're aware that this theory exists, you'd be better off, because you know what the plan would then be. We're not afraid of three-wave moves. Three-wave move to the upside, take the liquidity, and then move. Now, whether we call it inducement liquidity, we cannot move higher without taking liquidity. You agree on that? That is why this whole thing that I said here is BTC will not move higher from a consolidation. It's just that's just how price is delivered. Price does not move from consolidation to full-on reversal. If it wanted, it could have expanded, which is not full-on reversal, then retraced, and then moved away. Right? That we would have taken. Now, the fact that it consolidated here, we're always looking for whether it's a mousetrap setup. Again, zoom, accumulation, failure swing, opposing liquidity run, push, retrace, push. Get it?
Yes.
Yeah. I should have seen this one coming. Where were we? Long. Price pushed up here. Was it here? Yeah, here. Should have seen this one coming here, because price moved from here into there. But what was that actually? Kicking myself now. That was a zoom entry. Three-wave move to the downside. Price comes back in here. Zoom entry. Now the other theory here is that this move up here is an engineered false move. You can often see this violent move up here. That's the false move. The real range would actually be from the bottom here to the top here. This was the range, this was the manipulation engineered, and then that was the reversal or continuation. These moves happen all the time. So if we expect price, let's have a look here. Accumulation, failure swing, opposing liquidity run, push, retrace, push, right? Accumulation, failure swing, opposing liquidity run, push, didn't come back, may have come back in here or in here, and then push again. So here we got a first leg of distribution and then price pushed higher to entry. Now what this here gave us now is, remember when I tried to tell you is when things start to break structure, once you get a break of structure, it is forming a dealing range, and this is the easiest bread and butter setup you actually going to get. I'm going to show you now. So we took, especially if you take buy side and sell side, it means that the top here to the bottom here is your range, your dealing range, in which price is capped. What is your job once you find a dealing range? Your job is simple. Your job is to take a fib, put on the 50% from the top to the bottom, and you are not interested in selling anything, because this is a bearish case now. You are not interested in selling anything below the 50% because it's considered discount. You want to sell on the premium end of the world. Now once you go premium end of the world, what's going to help you? You're going to look for quite a few things. You're going to look for rejection blocks. You're going to look for order blocks, any fair value gaps, balanced price ranges. These are all your PD arrays that you're going to start to look for, right? Rejection block, order block, fair value gap, OTE entry. What else am I missing? Yeah, those are the main ones, the main that I'd consider, right? Even breaker blocks, whether it's breaker or mitigation, up to you. This is a mitigation block here. You could look for breaker blocks as well. And in this particular case on US 30, my setup was framed around the zoom candle here, right? So we had a 3-wave move to the downside. Price came in here. Look at this entry here now on the zoom candle, and then price moved away. This morning I longed this here at the bottom, framing the zoom candle setup, right? Looking for price to get back to the zoom candle and the Asian high, and there was a void in price and time up here. So I closed up here, price pushed a bit higher. I missed this move here. It's one of those things. But I'm in here now. Why? Because we formed a dealing range here to here. My interaction on the zoom candle was, or my idea was, my short, and I was actually looking for something in here at this particular time because price moved away so quickly. Something in here to form my entry to take this down. I missed it, but you can see the zoom candle in time. Can you see that? It's framing price and framing my idea that when price comes back to it, I want to be looking for shorts within the candle to take price to new objectives. So here, when this created the dealing range for me here, took sell side, buy side and sell side, all I did was I pulled a fib. I went down to even the 1 minute chart, right? Now look at this. Down to the 1 minute chart, and what can I see here that's in premium? I'm going to start to look for fair value gaps. I found this one, and it's in sort of a zoom candle, if you think about it, in here, right? Its own zoom candle. Can you see that? Is that too light? Make that a bit darker there. Can you see? That's a zoom candle there. Can you see that? And what did we have above it? We had a fair value gap here. Now, I didn't want to take a chance There you go, yeah, right? Fair value gap. And that's exactly where it touched. Can you see that? Right there. Now, I didn't want to take a chance aiming for the super precision of getting the entry here, because if I tried that, then I would have most likely missed it, because price could have very well just did that. I went for this fair value gap here, which is coincided with the zoom candle. I took the entry, even though price pushed higher above me. The next logical area or thing for me to have done is, once price broke, so we took buy side here and sell side here, break of structure, take a fib from here to here, because this is your dealing range now, right? So all we needed to have done is taken a fib. I'm just going to remove the zoom candle and the fair value gap. Taken a fib from the top to the bottom of the dealing range. Anything above the 50%, I'm going to look for PD arrays. We can see some fair value gaps. We can see the, let's have a look here. There is a very tiny fair value gap in here, but again, you don't want to be too precise. But if you were precise, then how precise could you be? Can you see that? Do you see that? All you needed to do was, if you wanted to be precise, enter there at the 70.5, the optimal trade entry, stops above here, and you will target the lows. You could have went for this order block if you wanted. It's in the premium end of the range. You could have gotten an entry there, and look where price is now. Rejecting off the zoom candle, and we expect continuation. So does the zoom model make some sense? It's not about the levels being hard and fast. It's about how price reacts in and around the level, which is what we are interested in. Because you're going to see, even if you just pull a level out in time, pull any level that you have or want to look at, just pull it out in time and look at the interaction of price. And this is most likely where people get the ideas of the simplest ideas of support and resistance. Maybe we should just call it support and resistance. We're giving it fancy names like FEGs and balanced price ranges, but support, resistance, you get the idea. All we're doing now with the zoom model is we're giving it preference, because we understand how important that particular candle is or can be, right? Like I said here, 3-wave move, zoom candle, price comes back in, frame your entry, take the move. Right. Before we finish, let's have a look at this guy, because this bastard took the liquidity at the bottom. I don't know whether to be happy or not, because it did take liquidity, which...
It's actually a perfect move, right? I mean,
yeah,
right where we were looking for reversal, perfectly took liquidity by a few cents, I think. And
yeah. Now, this is the tricky bit, right? Because this was most likely stop hunt and liquidity run rather than break of structure. You agree?
Right, yeah.
Break of structure would have closed below. So until we close below, it's not a break of structure, it's a liquidity hunt. Now let's just look at something here really quickly and see what we can see here, because oil sort of did the same thing. Sorry, gold, because it's all looking very similar to me now. This double sort of bottom kind of pattern here, and then it effed off. So I would not be surprised if oil started to do that, but we can't get too excited just yet until we start to see things. Now this as a reaction is okay. we had a consolidation here. We had a run below it that immediately got bought back up. But this is usually a balanced price range, but you can see that it's still very messed up in here. Too long a candle. The likelihood is that you're never going to get a full retrace back into this level, so you're going to have to take about 50% of this fair value gap candle. It's going to put you around somewhere around here, somewhere around there for an entry. I'm going to have to look for some sort of reversal around that level, but it's leading into the meme of that, right? Break of structure, get something in here, and then we'll look for a reversal here. We won't take it blindly. We'll look for reversal type of structures once it gets back into that level. So we'll leave it we'll leave it for a day or two. Mad upside potential on this one, right? It is where we said we wanted it to be. And again, look at this. What do you see here? So where would we target? At least there, right?
Right.
At least there. And then it may go lower here. So we got, or higher in fact, if we want to look at it that way, because you had accumulation, failure swing, opposing liquidity run, push, and then we'll probably get something like that and continuation there. So in here there's going to be probably a three-legged sort of move here, and then this guy is going to come back into that, right? Something in there, and then a move up. Why is it doing that? Well, let's call him in here, three wave, and this guy's going to come back into that level, and then it's going to push up like that. So yeah, we'll take that. All we need to do now is form and see whether the FA helps with our TA, right? I don't know if China is going to be messing this whole move up. I'm not sure. So,
Yes, I mean, honestly, so China, I don't think China can ruin the move as far as making it more bearish, right? Because China's still been pretty much locked down.
yeah.
If China opens up, if China starts any conflict with Taiwan, I mean, I think there's more potential for there being bullish
Yeah.
FA at this point than bearish.
So, you know what the sad thing about this move here is? And we're going to have to watch this one because, like I said, a move like this leaves a lot of people behind. Especially when you get this and this. Because what's going to happen? A lot of people are going to be expecting that at least fill it up or do something in here and then get that. But most likely all we may get, if I won't say if we're lucky, we are most likely going to get that. If it doesn't bleed a bit back into here, and what we're going to do is you're going to pull the order block to the left of it, and you're going to pull that one across this way here, right? Let's call him here, and we'll use that as our guide. How about that? Let's use this guy as our guide. Opening price, let's use him as our guide, centered around the 50% of the suspect candle. Right? It's a morning star, I guess on a higher time frame, and I noticed the same. The new poison is such a candle pattern, it doesn't retrace. Yeah, it's not meant to retrace. This is an engineered false move in the market. This was the level. This was the level that shit was supposed to happen from. This was the liquidity run, and immediately rebalanced in inverted commas or quotes. So again, accumulation, failure swing, liquidity run. You're going to get even maybe that. You're going to look for that, and then you're going to get that. Make sense? The box is going to be where we want to see price bounce off of.
Can we compare this to if we go to SPX?
Yeah, we can go
So
to SPX.
the low at 34.50 or whatever it was.
Yeah, we can do that. Hold on.
Just so maybe for the others too, we can see how that all played out because we had a violent reaction at the low.
I just saw something here now. Here. Right, let's go to a lower time frame, 1 hour at the lows. And you can see how that ended up being, right? Here.
Yeah,
Can you see what I'm
exactly the
saying?
same.
Can you see what I'm saying? Now, I don't have to have known that the S&P did this to tell you what to expect or how to play this, right? Because, like I said, let's get rid of this guy for now. We don't need this, really need this guy, right? Almost clean here. So what was the level? The level or the area was here, right? But we know that price doesn't reverse from consolidation. So this guy happened here. That immediately got bought back up. So that was an engineered move.
And this left me behind for the same
Like I
exact
said,
reason, right?
it's gonna be a sad thing that this oil move here is gonna leave a lot of people behind. But we're gonna be a bit smarter or cleverer on this one because we're gonna look for lower time frame reversal patterns, and I'll show you how we can frame or find them, right?
Yeah. If I don't take this, I'm just going to quit trading, right? So
Yeah,
I got fooled once on the SPX. I'm not going to miss this one.
right. So here's the box, right? And the idea again, da da da, da da da, right? Zoom model. Two things we can use. We can use the order block to the, let's see how this works out, right? It's testing some shit out here. We could use the order block here and pull him to the, you see how that works? Because that was the real level, right? If we'd never had any of this, what could we have had? We could have had that coming back into the level to give us that. You agree? This is the fuckery. This is the true level. So if oil did that, I'd be looking for it to come back here. Now, other things we can do. Dealing range created, buy side, sell side and buy side taken. Mark it off. Look at that. We have an order block. Let's call it inverted commas true range to the left of us in premium. And that's all that we needed. We could have, if you really wanted to be smart about it, you could have used some sort of balanced price range. But this one gave us a balanced price range. I don't think oil gave us a balanced price range. Can you see that? So it becomes a shit thing because look at the low time frame setups that you're going to need to take on this for this to work now, right? And I don't know why this just doesn't stay where it needs to stay once you do something, right? So if oil leaves the party but comes back into this level that we have marked, the true level, let's call it the true level, we are going to be looking low time frame for two things: break of structure and price pulling back into the level or a fair value gap. Now this is all hindsight, so it may maybe shitty, but the idea is, let's just get this a bit lighter. The idea for an early entry would be fair value gap forming here at the order block to the lows. You see that? Fair value gap forming. There's your order block. It's a down candle. I like it. So it's a down candle that created a fair value gap. As soon as we want to see early market structure shift, as opposed to here or up here, as soon as this candle traded through this candle's opening price and through the fair value gap. So the fair value gap confirms the break in structure only if the candle trades through the order block opening price. Does that make sense? Does it make sense what I just said? So you're confirming this to be an order block, but you can't confirm this to be an order block unless price moves through it. And you've got the second confirmation is that if there's a fair value gap, in this case the fair value gap is before the confirmation of the order block. So you confirm the market structure shift before the confirmation of the order block. Both can happen together, but usually it's the other way around. Price will trade through the order block, the fair value gap would be higher, and when price closes above the fair value gap, that's when you need to be buying. So all you needed to do is, once you got two confirmations, fair value gap, price is above, closed above, price traded through and closed above the opening price of the order block, the very next candle is a buy. This candle. Stop below here. And that's all that you needed. It's like witchcraft. You never got any 50% sort of retracements in here. The only other thing that you got in here and that you're going to have to look out for is things like this. Fair value gaps that are balancing each other out. There. That's the only thing. But then where do you put your stop? Do you put your stop here? Do you put your stop here? It's a bit far away.
So can you go, so where we've marked the move kind of ideally to buy,
Right.
you go to those two sets of up and down candles right to the left of it?
Right.
And not on oil, back on the chart we were
On
looking
S&P.
at though. Yeah.
Right.
We entered our box, right?
So you entered.
Right, and so we have
Right. So
kind of that
price.
up and
Right. So price is coming back into the box now. Right.
You're right. So initially, those initial moves, why are those not? I think I have an idea why, but just
Which ones?
so the ones that immediately entered the gray box
Here.
and then poked out of it. Yes.
Right.
Why would we not
Because
be looking for?
There's no fair
there?
value gaps and price didn't trade through to confirm the order block.
Right. Okay.
There's
Perfect.
your order block. Price didn't trade through. No fair value gaps. This guy here. Price didn't trade through. No fair value gaps. Can you see that?
Yes. Okay. Perfect.
This guy, down candle, fair value gap, price traded through. It's a buy. Stop's going to be the same. It's an aggressive early buy because you don't know whether you're going to get a chance to pull a fib from here to here and hope that it does 50% before it does that. In both instances, your stop's still going to be here. Otherwise, now you're left scrambling to look for these sort of fair value gap entries or propulsion candle entries, which are basically down candles on an order block that propel price. Would be here. Can you see that? So possibility is you could have gotten 2 to 3 entries in here this low, but you had to work for them, right? They just didn't come to you easily. This was all work. Later on, maybe in the S&P, at those levels, you could have did something like this. Let's see if this works. You have the fair value gap in here, and I don't know if it's going to work this way. We'll try it out. Just missed it, right? So you probably might not have bought that shitty thing. So could have missed that entry. It wasn't in a discount array, so you could have missed that, because you don't know whether at this point, in hindsight, we know that it moved away, but when you were at this point here, fuck, who knows whether this was going to move away. Why couldn't it have just fallen even lower there? We don't know. We could have just did that, right? Taken liquidity here at the zoom. Didn't do that. Right, so break of structure, new dealing range. Let's see where we actually ended up in life. So we didn't get a lot of chances to enter in this. Eyeballing it, I don't think this is the 50% either of this entire move here. Just about the 50%. But then again, where do you put your stop? Okay, so if this was the 50% and then price moved away, okay, let's try and find something in here then. Immediately I'm seeing zoom model here. See that? Order block as well. So can you see how hard you have to start working for these entries? Don't just come. It's a lot of work. But the more you start to anticipate what you need to be seeing or want to be seeing, then you'll be better off. Like you see, look at this setup here, right? Propulsion candles here that are taking price higher. So the tops of the order blocks there, right? But at the back of my mind, I'm thinking that this is all building trendline liquidity here. It's engineering liquidity to be taken later on, and that's exactly what it does. Trading is a such.
I think that's why if we can be aggressive on these entries, right, and you grab the first entries.
That's my point in trying to show you guys this model here, right? This model here is basically an ATM if you can get the concept right. Now, I'm not too sure if everyone understands it, but there's not much to it that needs to be said, right?
Yeah, I think watching oil is going to be a big one, right? We watch forward test this idea and see what happens.
Let's look at this setup here. And if you look, this is Forex, no, SPX, NAS, US 30, US 100, okay, US 30. The ideas are similar, right? The level, the run, and you're not lucky to get the entry. Most likely it comes in here. If you are lucky, you're going to get that dip there, and then price is going to move away. So it's the same with oil. It's the same with oil. If it starts to run away from us tomorrow, we're going to look for something like that. right? At the 50% or at the order block. And then we're going to try and catch an early entry here like that. My only thing is that this starts to get a bit wicky, so it leaves you with 75 to 80, a $5 stop. Do you have the balls for that?
Yeah, I do. This is a swing, right?
Yeah.
So this is all about when you know where your stop is, your position size is going to protect you.
Yeah.
Right? If your stop is going to be larger. So I'm just going to use I want to use a big position size for this because I think the setup is playing it exactly as the SPX did that left me behind, but just don't want to get too greedy. So
Yeah. So D-Rock, you're right. Picture in the group, OB confirmed, market structure shift didn't happen, no close above FVG. If the OB is confirmed before the MSS, that invites the idea to purge the order block or allows for the OB to be run on both sides. Yeah. So here we got the market structure shift before the OB is confirmed. If it was the other way around, then we allow, like you said, we can allow the idea that if the order block was confirmed, look, I don't even like this order block to be honest with you. So we're playing with fire here. On this time frame, it's a down candle. It's okay if we start to push higher. I suppose you can form fit if you go to a high enough time frame that it would be something palatable. But this down candle is just frightening me a bit. But let's see what happens as price comes in into the level, because I can see from the chart, like the chart, Agua is showing me that price can move from the down candle, but it just means at some point these are going to get raided. Right, I think we've covered enough stuff for tonight. Small little call ended up being 1 hour 20 minutes, but that's fine. I'll upload it to YouTube for the rest of the guys. And
I told you, do it. Talk to yourself. It'll be quicker for you.
It always is. But I've gotten so used to talking to someone, or at least knowing that someone is there, that now I'm just lonely if I don't.
As long as you're enjoying it, I don't want to feel like we're wasting your time. So
yeah, it's enjoyable because it's like a refresher. Then you start to see new things and explore new things, but you can see how hard it is to stock an entry on something. It's the fucking most difficult thing. It gets easier.
Is there a way in Discord for, like, let's say you mark out critical levels that we need to be sort of as a group keeping an eye on, right? Setting alerts for the
you can
for the level.
You can. It just Geo had a server that used to send alerts back into the Discord. You can try and set something up.
Yeah, and then from there, so if we're all kind of watching the same charts.
Yeah, so we had I remember we did it for Genesis, and the signals were being sent to a specific channel on a 4-hour for specific things. So yeah, it's possible.
Okay.
It's possible. All right, guys, have a great. What time is it there now? Afternoon, evening? It's almost.
Yeah, US just finished their game, so.
Yeah. All right. Catch you guys later.
Thanks, boss.
Cheers.
Bye.